Afternoon. How are we all doing? Afternoon, everybody. Ian, Harold, Crum, Julio, Kennedy, even, Virginia, Burke, Boomo, Emac, Gregors, Brian, Bug. Is that Bug? Ant? Not a cricket, is it? Afternoon, David. Closest they've got to a cricket. I doubt they've got a cricket. How are we all doing? So, we've had some news this morning. The unemployment claims came out pretty much exactly as expected. So, no news for the US dollar. We've had a little bit of a downturn on the US dollar off the back of the news, but not really any movement. So we got Lagarde speaking later this evening and Powell as well. So there's no more news today. That's it. We've had it. It's a no news week. It's just one of those weeks. Monetary policy statement tomorrow for RBA, although we did have the rate statement with the rate on Tuesday. So not sure we're going to get any movement out of that. And then GDP tomorrow morning before the Frankfurt Open. So no more news today. No news this morning. Apple's had a bit of a problem with its tax bill. Other than that, nothing much to report. Vujkic, I think is how you pronounce it, but from the ECB. The ECB must be ready for either rate hikes or cuts in 2024. We will either put the rates up or down within 12 months. Cheers for that. That's about as clear as mud, that guidance, isn't it? US Fed done raking heights this cycle, said 87 out of 100 economists. This cycle being, I presume, this year, stroke quarter. So nothing exciting there, but that's it. So there's no news anywhere. DAX made a loss on this morning. Couldn't get out of the DAX at all. It's just been rallying like a lunatic. So got hedged at the open, went long. We dropped short into the pre-market lows. I took the long hedge off at that high. We basically had some bearish price action at yesterday's high. So we had a inside bar form. So I took off the high on that inside bar, expecting to get a bit of a pullback. We got a rally, and then we came back down again. So the aggressive entry pulled back down into there, which brought me back down to about $500 in loss. And then we sat and slid sideways. So I re-hedged it basically there. Just to make sure that it didn't hemorrhage any more cash. But yeah, not stopping today, DAX. So I'm out of that. And we'll see how we go with the US session. But yeah, very tricky DAX today. It's just unfortunate we got hedged. But anyway, couldn't get out. So the rest of the US indices so far today, not a massive movement again. So we've had a bit of a wider session today, a bit more volatility today in the Globex session across all the indices. The S&P has actually already pushed past yesterday's high, so we are bullish. And the Dow, not quite there, but it's had a bullish morning. So all indices looking bullish so far today. So we'll see where we go. But we got 2 minutes to the open. The Dow's just sold off pretty damn hard at the open, before the open. Look. So we'll see what happens there. Stick the crickets on again today, shall we? Always good to listen to what's going on. Yeah, so that's about it. Bit of a boring morning. We'll have a look at the FX in a minute, but there's not a lot to look at. Morning, JC. Afternoon, even. Evans. Beyond XRUpdate.news. Virginia Apple, was that they hadn't paid the Irish government enough tax? Yeah. So, well, I don't know if it was the Irish government, but they basically haven't paid enough tax. So they're going to court in the EU clash over 14 billion tax bill. It's a hell of a tax bill, isn't it? So yeah. Got out the DAX at break even. Good job, EMAC. Well done. Did a hell of a lot better than me today. No ADRs to look at today. A lot of selling coming in pre-market. So yeah, no ADRs to look at today. Weeklies, we've got oil extended. So there's nothing at all to look at on the ADR front. RSIs are the same ones as we had this morning. Nothing much to look at. Aussie New Zealand's got extended on the 4-hour, which wasn't extended this morning. So that's just triggered. I'm almost at TP on that. And oil, I've triggered one long. And it's pulled back immediately. So not my friend at the moment, oil. Another 1% risk. Right, so we'll see how we get on this afternoon. Got some progress to make today. Wow, a lot of volume coming in. Christ. So it's short on the Dow. Pre-market's too small on the S&P and the NASDAQ. NASDAQ's broken long. Typical. NASDAQ's the only thing moving, and I'm not in it. So Dow triggered short. Apart from that, very big move at the open there on the NASDAQ to the upside. Everything else is selling off. A lot of selling coming in. You heard the selling coming in pre-market. They're carrying on with that. So let's see where we're off to on these today. A lot of selling. No buyers at all. So Dow, obviously we're in the middle of a 3-day sort of range after the leg up. So we've had this big leg up. We're looking for a pullback, basically, to profit take on some of this move. So obviously, if they want to. At the moment, it doesn't look like they actually want to or need to. But yesterday was a little bit more of an expanded range, but the ranges are very, 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 very tight at the moment. So upside and downside targets are very easy. Obviously, yesterday's high and low. Very simple on the Dow. We've got that area coming up here, this big purple line or pink line, which is these lows. So somewhere around there, there's upside resistance before we get to ADR. But we'll be looking at yesterday's high-low first of all. Ooh, selling off hard today. The S&P. So again, we're above the high, well, we had been above the highs. We've broken back down below yesterday's high already this morning. So that's the previous day's high, that dotted line. So you kind of ignore that. It's probably not going to act as support. It was resistive, but could be. But yeah, we've broken up. We've just tapped into last month's high pretty much to the pip. Yeah, so that is last month's high. That is exactly what we've just hit on the S&P. Yeah, that line. So that's what they're selling off on at the moment. Nice big sell-off going on. And the downside target on this one, you're looking at yesterday's low. Is the first real stop, obviously, if we're going short. And the NASDAQ, again, last month's high. This is our third attempt at last month's high, third rejection so far, obviously. So we'll see where we go from here. But market is certainly rejecting the highs at the moment. We've had that big rally and we've gone sideways for 2 or 3 days now on most of the indices. So we've run out of steam to the upside. If they do crack that upside, though, obviously there's a big run ahead. So we'll see where we go. But we certainly seem to have stalled out a little bit. But downside targets, obviously, is going to be yesterday's low and then the previous day's low on the NASDAQ. That is also ADR, previous day's low. So we'll see where we go. Obviously, you heard that massive sell come in at the open. So we'll see if they can sustain that today. Obviously broken short, which is good. We'll see if we can get a continuation on this. There's a hell of a lot of sellers coming in. So if we do continue to make progress to the downside, we could have a big day today over ADR. So we're due a pullback on all of these. Obviously, we've had that big rally. So we are due a pullback, but we'll have to wait and see if they decide to make the move. Not sure I'm going to get on these because of the width, the size of the ranges. Yeah, that's okay. Probably will. Where are we? 80. Yeah, that's fine. Okay, so taking 5-minute ORBs on the Dow and the NASDAQ. Sorry, not on the Dow, on the S&P and the NASDAQ. So we're running into this propulsion gap, which is where we've hit a brick wall. First target today is the pre-market lows. Very nice and neat. So we'll see if we can get down to yesterday's low first. Short on the S&P. Why have you not triggered an order? Short on the S&P over there. No idea why it does this. No idea at all. Taking a manual on that. For some reason, that's not triggered. Again, why does that happen? It's so intermittent. It's a requote. That wasn't particularly violent, that move, from what I can see. So I'm not quite sure why that one didn't trigger. So triggered it manual. TP1 will be 2R. TP2, I'll have to set manually in a minute. So short S&P, short NASDAQ, short Dow. Fingers crossed, we continually hear these crickets going down. Batman on GJ, H1. Batman. I'd go along with that. That's a short target. Normally Batman's like that, but we'll give you that one. Half a Batman, that is, which is exactly where the entry signal is. So that reversal alert you're about to get on the second ear, or cowl, to be technically correct, is your signal to go short. Someone's been studying their candlestick patterns. My US 30 did not trigger the short. Mine did. I really don't know what that issue is. I cannot replicate it. It's an issue every now and again. It's just done it to me on the S&P. It hasn't done it to me on the NASDAQ. Hasn't done it to me on the Dow. It hasn't done it to me on any of these. All three of these triggered absolutely perfect. No problems at all. It seems to be something to do with the speed of movement through the order, not being able to get the order on, having a requote from your broker, and it just doesn't trigger for some reason, and I don't know why. And I don't really have a solution for it because it's giving back an invalid stop loss take profit order, which means for some reason it's unable to put the TP or the stop loss where it wants it to be, but they're all pre-calculated. I don't actually know why it's doing it. I need to spend some time looking into it, but it's one of those things. This MT4 in its wonderfulness is actually really crap at logging. You don't get any logs as to why. You get these ridiculous messages like common error. It's like, what's common error? And it goes, well, common error could mean one of 74,000 things that's happened within your code, but we're just going to tell you it's a common error. Thanks for that. And this is very much the same. Invalid stop loss or TP. I have managed to replicate this error with an EA that does not use stop losses or TPs, yet it comes back and says there's a problem with your stop loss and TP. And I say, I don't use a stop loss and TP, and it goes, there's still a problem with it. How can you fix something that you're not having a problem with? You know, it's just one of those weird things. So I'm going to look at another option, possibly, which would be not using pending orders, but that is going to be it's basically a rewrite of the entire bloody thing. So not my ideal, but anyway, you just got to have to manually trigger them if they don't do it like I did on the S&P there, but it's not ideal at all. But again, hasn't triggered on the prime. Why would it do it here and not do it there? Just no reason. Same data, same prices. Odd. Afternoon, James. It happens when at time of the pending order to be placed, the price is already below or above. No. No, because if you look there, that didn't trigger for me on this S&P, yeah? The pending order offset there, right? Price was here. And if price is beyond, it will still place a limit order instead of a stop order. So it's not that. I don't think anyway, but it is certainly to do with the volume and the speed of that movement, because it only happens when the market's going nuts. Like with the amount of, you can hear obviously the amount of selling that we've got coming in today. There's a lot of orders coming through. I get the feeling it's something to do with broker execution. You're not getting the execution, and there's something that's stopping the EA re-triggering the order, but they don't give you any information about it. So I need to do some research. Okay, so all three breaks short underway. Been studying candlestick, support and resistance, and patience. That's exactly what you need to study. The only things we've got to work with, isn't it? Candlesticks, support and resistance, and patience. Afternoon, Mark. I don't know why my US 30 did not have a pending order for short position. Don't know. It's to do with volume, I think. Needs to be looked into in some way, shape, or form. Okay, so obviously you hear the orders have stopped now, so we're going to get a bit of a pullback. So we're looking for the propulsion gaps to hold. So hopefully we're just going to get retest downward legs. About time we had a clean break and some volume come through, but knowing this market, this thing is just going to go like that. Let's see. It's not playing ball at the moment. The market is very, very erratic. Let's just have a quick look at how the US dollar's opened. Pound New Zealand ADR. So that's the first ADR of the day. Pound New Zealand. Hit to the downside. Here come the buyers. So that's not really the pound. Looks like the New Zealand dollar is rallying. Yeah, big rally on the New Zealand dollar, which means Aussie New Zealand will be coming down further as well, which is getting closer and closer to my target. All right, that's enough buyers. You stop now. Yeah. So yeah, pound New Zealand ADR. There's a big push on the New Zealand dollar at the moment. Across the board, rallying like a loony. So ADR hit to the downside. That's just beyond yesterday's low. So the fact that we've just broken yesterday's low and we've got a rally on the New Zealand, I would say we're probably wanting to drop a bit further. So you could take an ADR reversal on that one. Drop down M5, wait for a reversal alert. Nice and tight alert. You're going to get in there. Upside target obviously would be in propulsion. But that would be a much nicer entry at 150 ADR. Go away. So watching these highs we've just put in. See if we can hold these highs on the previous 5-minute candles. Want to hear a rally of sellers coming in through now. So much for Batman. Has Batman failed already? Yeah, give it another... How long we got? Got another quarter of an hour yet before that candle closes. I mean, technically, this is the thing with candlestick patterns. They are very discretionary. Yeah. So technically, a Batman is a rally. Yeah. And then a pullback. And then an attempt to go higher, which fails. Yeah. Sellers take back control. And it forms a double top. Typically, you have a rally in between it. What you've got there is kind of market structure sort of to the downside, and then a bit of a mess, and then a second attempt, which is kind of a lower high. It's a very loose one, but all candlestick patterns are loose. Yeah, every head and shoulders pattern, no head and shoulders pattern looks like that, do they? Just not. That's a head and shoulders there. Yeah, there's your entry. That's a head and shoulders pattern. They never look like the books. Therefore, technically, that is a double top, which is all it is really, a Batman. But it's a multi-day, which is a four-day move, basically. Buyers running out of steam, unable to continue. Sellers not able to make a new low. Yeah. Buyers having a second rally. Sellers trouncing them. Failed attempt to a breakout, which is basically what it is. But yeah, I'd go with that. Wait for the reversal alert, though. You know, this is wait for the structure to break. It's not at the moment. New lows on the Dow. NASDAQ's not quite. I'm going to take the Dow. Whoops. I'm going to take the Dow manually in a sec if that doesn't hit it. Literally, it's missed me by that much. That's too close. Not letting that pull back. We haven't made a new low on these two. Yeah, we've made a new low on the Dow. So if this is going to spring from here, that's going to go with it. So I'm taking the TP there. That's literally the difference between that and that. It's not worth not taking the profit for the sake of 3 pips or 5 pips, whatever that is. 2 pips. So yeah, TP here on Dow. So let's see if we can get a rally and a runner today. So oil at the moment, I've triggered my long on this, stop under the lows. I'm having another crack at this to try and get this pullback done. Seeing as now we are at 125% of our weekly range this week. We've got no oil inventories to help us this week, so we're literally relying on oil naturally just having a bit of a pullback. So more sellers coming in. Something's up. The sun is reflecting on your wall. It certainly is. Well spotted, Brian. Ta-da! I left my blind open because it wasn't sunny when I went to come on. Now the sun's come out. RSIs, we'll quickly look at these as well. Aussie, New Zealand. Get that off. For the sake of that, again, I'm just going to take it off. So that's going to be about 0.8% profit. 300 I made, so 4, 5, 6, 7. So that's 0.7% profit on the move overall. on that Aussie New Zealand because I've already banked 0.3%. So flat on that. So that was 0.3. That's 0.4. So that's 0.7 overall on that move, which has taken forever. It's just, that's part of a Batman, yeah? So what you normally have is a high, a rounded top, and a double top attempt, which fails. So it's basically a really long balance or accumulation where they have a price discovery failure. And then you go back the other way. Obviously that isn't, but that's kind of what you would expect to see on it. So out Aussie New Zealand. So that is extended on the 4-hour RSI. To the downside, we've only just got down to the 25 level. So looking at this move here, which is what we're playing, that's a 50% retracement. Yeah. So if we are going to put a new leg in long on the Aussie New Zealand, that's basically where I would expect to bounce from. It could come down deeper into that propulsion gap, in which case then I would expect it to test this support resistance. So there's your support, resistance, resistance. So I'd expect it to test that level, which is 71.9, which is a deep retracement. But I don't know where the Aussie and New Zealand are going, so I'm just taking it off. It's all money at the end of the day. Swiss yen, that's extended to the upside, 4-hour. All yens, I looked at these two this morning as well. The Swiss yen and the euro yen, very similar because they do move together, the Swiss and the euro. We've got new lows now on the S&P. NASDAQ's not quite there yet. It's trying. Can't hear any upticks though, which is good. We've got nothing but sellers on board this afternoon, so so yeah, Swiss yen, good potential lower high going in. Just as I say that, they start buying. This is stuck now for pretty much a day sideways. So we had a rally again yesterday, but since yesterday afternoon, we haven't really gone anywhere. So potentially a lower high going in on this one. But we've also had a higher low going in. So we're forming a symmetrical triangle at the moment. So it's contracting. So the Swiss yen and the euro yen potentially new legs down on those, starting to roll over. But this yen is very, very weak still, as you can see. There's no strength coming through on the yen. It doesn't matter what they do, how much they try and intervene. They cannot get this yen to rally at all. So the danger is obviously with the US dollar yen again trying to break out of that 150 level. If it manages to do that, we could be in trouble. I think I might take the Dow off. We're double. Oh, I'm locked in on this. Oh yeah, I'm trailing with 1R anyway, so I'm going to lock another 1R in on the Dow. So basically that is 1R. So I'm just trailing with a tight stop on the Dow. We're down at the pre-market lows, which they're buying up at the moment, obviously. So there's a good chance we're going to get a pullback on this before we start a new leg, unless they really, 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 really want to drop this today, in which case, obviously, it will just collapse. But we are going to get a pullback at some point, so I want to lock in as much profit as I can on that. We're just retesting the opening range on the NASDAQ. Hell of a lot more buying coming in on the NASDAQ than there is in anything else at the moment. Looking for market structure to come out of that propulsion gap. So that needs to hold. Jesus. Buying that up, haven't they? Okay, propulsion gap filled. They want to see this really pull back from here now. Otherwise, we got danger of cracking onto the upside here. Hopefully they haven't just said, oh, Apple's decided to pay its 14 million debt, or billion, whatever it was. We've got Bostic talking at the moment. Dow Jones, lower high, lower low. We're holding on the S&P. I want to hear some sell volume come in now, just to make sure that that was a pullback, profit take move by the sellers, and then new leg by the sellers. So just don't want to hear any upticks coming in now. I want to hear the next batch of orders roll this lot over. So there's your RSIs. Not a lot of interest there. The US dollar yen, Swiss yen, and euro yen all nicely extended. So, well, US dollar yen's not that extended, but they are, you know, all looking like potential rollover. And if we are not going to go anywhere with these yens, you know, the euro yen has made a new high already, but there's every chance that we might just move into some kind of range on these and hold for a bit, because there's no reason for the yen to be particularly weak. There's no reason for anything to be particularly strong against it either. So obviously it's weaker than everything at the minute, but we'll see. Come on down, revisit yesterday's low. That'd be nice. So a new batch of sellers coming in. So pre-market low is first stop on the S&P for support potentially, which is exactly where we are on the Dow. NASDAQ's looking like it wants to go long, isn't it? It's all gone quiet. Don't like it when it goes quiet. Oh, it's gone very quiet, isn't it? Calm before the storm. More buyers, that's not what I want to hear. What's he got a Swiss? So I had exits on these again today, but haven't taken them. Looks like we're double bottoming. Aussie and New Zealand both rallying by the looks of things at the moment. So both of these, the New Zealand dollar is the stronger of the two at the moment, but Aussie's rallying along with it as well. In danger of getting hedged on the NASDAQ, making new highs. Not looking good. There's an ADR alert. New Zealand dollar yen, ADR. So New Zealand dollars up at ADR. That's new highs on the New Zealand dollar yen on basically in the last week. So monthly highs coming up. Resistance at 125 to 150 ADR. So potentially look for resistance on this one. So this could be a good short today. Obviously, this thing's rallying like a lunatic at the moment, but if we can get up to sort of this sort of level and then start to flip-flop around, get a reverse alert up there, will be a good short. Yes, I need to those two. Out the Dow, flat. So closed out on the Dow. $1,400. So that chips into that. So I'm $2,000 down on the day so far. See if we can get a continuation short. But I get the feeling we're going to hedge on this and we're going to fly out the highs for some reason. This NASDAQ is totally out of sync with the other indices at the moment. Totally out of sync. For some reason, they're buying the crap out of this. SoftBank loss, Emirates profit. Don't know. Maybe it's related to Apple. Hedged on the NASDAQ. Dollar dumping, is it? Big turnaround. Oh, see this? They just got run over. I'll leave that hedged. Nothing I can do about that one. Gonna be another loss day today. Gonna struggle to get this back, I think, unless I get out of this NASDAQ now. This looks like it's dying, isn't it? I'm going to get out of the NAS long. I'm not going to take that hedge. I will re-hedge that if necessary. But I'm liking the look of the price action here. And that's a double top. So I'm just going to close that and hope that was just a very big profit take move. It's bigger profit take move than the actual move, but the others are putting in bearish market structure. So I'm getting out of that. And hopefully ride that one down. But if we do push back up again on these two, I'll re-hedge that. So I'll just take a $500 loss and re-hedge it. But a lot of sellers coming in now. DAX is selling off as well. Big move. Don't know why that's pushed up quite so high. We just got much more movement coming in on the NAS than we did on the other indices. So at the moment, these are still indecision bars. Yeah. So there's no directional bias on this. This is just an outside bar. So basically, buyers and sellers, buyers couldn't make progress up. Sellers have made progress down, but only after being beaten up by the buyers. So outside bars, until you get an outside bar break and close to the downside, this is still an indecision bar in the same way as an inside bar is an indecision bar. Need a confirmation of direction. So watch these two for next leg down. We want to put a new lower low in, which will give us structure to the downside, which gives us a little bit more faith that we're going to flush today. Just don't like the fact that that pushed so far out the highs there. That's much more strength coming in on the NASDAQ than anything else today. See where we go. Bearish engulfing going in on the DAX, but obviously that's still an outside bar. So wait and see. We are running into the lows on the DAX. We've run through the lows on the DAX. There we go. Bit more bearishness coming in. I can't hear any sellers though. But then again, I can't hear any buyers. So if I was hearing a load of buyers coming in now and this doing that, that would be much nicer. Or a load of sellers. But hopefully the next candle will get some another rally started. Hopefully that's the right decision today, but we'll see. So yeah, I am going to get ready to re-hedge that if necessary. Anybody got any other pairs they want to have a look at? Because there's nothing to look at on FX at the moment. We are so unbelievably sideways again on the FX market. Just we're struggling with any direction really on anything at the minute. A lot of stuff seems to just be getting into for a while at the moment, and having to hold like that Aussie New Zealand, you know, been holding that for since the 17th of October. Taking for ages to get out. If there's anything you want to look at, let me know. Dow testing low of the day. Terminal's frozen. Okay. Okay, new low on the Dow. A lot of sell volume. Definitely got more chance of being a seller today, I think. I'm looking at a short on UJ if it gets to the 151.5. Yeah, I'm going short as well if it gets there, but I don't think it will. So if we get back up into this propulsion gap, basically, or retest that 150.17, basically, I think that is where we will start to get shots across the bow again from the Japanese. If we breach that level, that 152, this is the October intervention level. If we breach that level, they will be doing something about it. So I kind of like to see this rally up to there, but what I would like to see it do is not muck about. I'd like to see it get there on a news event and really slam through that level, because if it slams through that level, they will slam it back. So if we just grind like we did here, you know, if we just grind our way up to a new level, which takes 2 weeks, it just doesn't trigger an intervention. So I'd like to see it properly move. So we've got University of Michigan tomorrow, which is the only thing we've got left this week that could potentially drive the US dollar up. So there's possibility tomorrow. We've got Powell speaking later. From the comments we've had today about the ECB maybe putting rates up or down at some point in the next 12 months, the Fed saying they're done with rate hikes for the next quarter, I don't think there's anything he can say really which is going to rally or dump. It's just going to be, we're going to be led by data, and we're waiting for inflation figures. Inflation figures don't come out for ages. So when is the next inflation? Sorry, don't come out for ages. They come out on Tuesday. So yeah, next Tuesday's the day, basically. Potentially. Okay, big sell-off underway. That was the right call on the NASDAQ. Shame I got stopped out on that one. The other account is running a 2R trailer, so that one's still in. Right, so let's look at some downside targets. NASDAQ, you're there, pre-market low. So that's first stop, which is basically today's open, is basically first bounce, basically. Failing that, that isn't really a propulsion gap. That's more of a V-shaped recovery move. So I wouldn't really class that as an area we're going to find buyers. It is an area where a large order went in, and retested, and they added to it. So there was buyers there yesterday, but it's not really an accumulation break, which is what a good propulsion gap should be. It's part of a V-shaped move in the market. So I wouldn't probably pay a massive attention to that. If we get down to there, we could get a little bit of a bounce out of it, but yesterday's low. So 2.5R basically on the NASDAQ to the downside. S&P just tapped into that weekly level. So that is last week's high. So this is this high from last week, which we've used as support 3 times so far. We just tapped into that again. So we'll see if we can get through that level. If we can get through that level, you're looking at yesterday's low, which is just over 3R. And then you're looking at the previous day's low, which is about 4.5. Dow. Yesterday's low is exactly where we're kind of approaching now. That's done 4R. So if we break yesterday's low, we're looking at the previous day's low. Yeah, so there's 2 areas we're going to find limit orders here. They're going to need to go some to get through that zone. We've got an area here which we've bought up 4 times. Yeah, so this is a very, very strong area for buyers. So we're going to struggle to get through that level. We're going to need a hell of a run up. It would probably bounce off of it at least once, I would imagine, and then we're going to need a run up to get through that. There's going to be iceberg orders sitting here, and not just one. It's 3 days worth of orders sitting there. Markets have been trying to push higher from this level for 3 days. There's no reason why they won't do it today. So we're going to find quite a lot of orders sitting here to get through as well. So there's a lot of support. We know there's a lot of support because we've been going sideways for 3 days. We know the sellers are just not able to get any traction to the downside, and they're not willing to let go of their longs. So if we do break that level, though, we can flush as far as you want today. Really depends how much volume there is. But anybody that's long here at the moment is sitting on the same P&L for 3 days. Yeah, as soon as that P&L starts to shrink, they're going to think twice about holding this. The more it starts to shrink, the more they're going to dump it. The more they dump it, the faster that sell move is going to come, which is why we do the climbing up the stairs, falling down the elevator shaft move, because these people are watching their P&Ls grind away. So they become sellers, getting out their trades. So we've got to break some levels first, though. So it's all gone quiet again, but we are still selling. So that's good. Shows there's momentum to the downside. Some more coming in. DAX has hit a little bit of a roadblock as well. Okay, so testing new lows. Double bottom. Didn't get out the NASDAQ over here. It's annoying. It's a bit deep. I didn't get out the NASDAQ on that account, as I did there. I don't really want to take the longs off here in case we do double bottom this area. Obviously, I want to hold that. So we are running out of steam a little bit again. Gone quiet. If you have time and mind, would you show the timings on the SIH for the US indices? Assuming they're the same as yours, I've got 425, 430, and 435. obviously first candle on your broker and last candle on your broker, you need to look at your broker. So just look at yesterday. What was the first candle yesterday? What was the last candle yesterday? Those were easy. But the pre-market, for me, it's 2:30 in the afternoon, which is 4:30 on my broker, which is 1:30, which is 9:30 in the US. So it's basically 5 minutes before, 5 minutes after the open. And the stop trading time is basically, I put mine 10 minutes before the last candle of the day. So the last sort of 10 minutes of the day, you quite often get quite a big move. If you look at the end of a session. So if you look at end of yesterday, yeah. So you quite often right at the end you get some movement, and sometimes that movement is quite big, and it's enough to get you out of a position at a break even or get you out at a profit target. But the last 10 minutes of the day, obviously, we tend to start running out of liquidity. So I just take it off just before the end of the day. But it's up to you, really. Anytime, but just somewhere around the end of the day. I just don't want to hold it overnight. That's all. It's not an overnight strategy. It's an intraday. If it hasn't worked intraday, it hasn't worked. Okay, so we've double bottomed here. This is look at the strength in this NASDAQ. So much stronger than the other indices at the moment. For some reason, they're buying a lot of tech today. I'm not quite sure why, but they are. You can see the Dow and the S&P trying to put in bear moves. This is running away, look. Which worries me a lot because they've just bought that low again. Yards at 5:30, so. There we go. So Bank of England confirmation there, or not confirmation, but a poll probably of economists as to what the Bank of England's going to do with the interest rates, i.e. nothing at all for the next 12 months. Exactly the same as the Fed said, pretty much the same as ECB have said. We are not touching rates now. We're going to watch inflation for the next year. We're not going to touch rates, and we'll have a look at changing them this time next year. So we've potentially got a rate freeze on. As long as that CPI figure isn't doing that, that is basically what we're going to see. But as they all keep saying, it's data driven. If CPI does that, you've got to do something about it. The biggest toolbox they have is interest rates. So we'll see. But looks like everybody with a mortgage got another 12 months of pain, at least. Virgin Galactic stocks surge 30% after announcing plan for cost savings. Where's Virgin Galactic? Where are they? Not quite sure. I don't know if they're probably in the S&P, aren't they? They're not tech, are they? So aerospace. So they'll be in the S&P. So that's not why we're getting strength on the NASDAQ. So want to see this propulsion gap hold ideally. New Zealand dollar Swiss just hit ADR. Third ADR of the day. New Zealand dollar again. Big rally on the New Zealand dollar today. So that's just broken out yesterday's high. Previous day's high and that propulsion move. So that is a nice accumulation break. tested 3, 4, 5 times, 6 times. Definitely a load of sellers sitting at 125 ADR. So if you can get rally to 125 ADR today, good chance of a nice big profit take move on that leg. Entered on Aussie US dollar, mean reversion, ignore you. Okay. Still going to look at the chart. I'm in long anyway on that. First entry. Ooh, that was a big order. Somebody just puked. That was a large dump. What's your broker time? Right now, 17:15. Is interest rate decision good or bad for the dollar? Depends what the decision is. So interest rate rises typically are good for a currency. Yeah. So when you're looking at where to put your money, you want to put it where you're going to get the best return, which is why nobody puts their money in the Japanese yen, because they give you a negative interest return, so a negative overnight rate. If you stick $1 million in the Japanese bank accounts, you will lose 0.1% of that on a regular basis, because they are taking money away from you for the privilege of holding it. Yeah. So if you've got $1 million to invest in savings in a bank, which you don't do because you put it in the stock market or something, you want to put it where you're going to get the best return on it. At the moment, the US dollar and the New Zealand dollar. Pound's pretty good. CAD's not bad. So you put it in there. So basically, interest rate rises attract investment, which makes a currency bigger because it just makes it stronger, more powerful, more stable. So when interest rates go up, you tend to have a positive impact. But what the market does is it preempts the movement. So based on inflation, gross domestic product, and unemployment, the market will predict what interest rate changes are going to cut. Yeah. So you tend to find the market moves before the interest rate announcement. Then you get the interest rate announcement. If the interest rate announcement is what the market thought, they go, brilliant, we were right. If it's bigger than they thought, they go, crap, we need more of it. If it's worse than they thought, they go, shit, we got too much, and they get rid of it. So your market movement is always predictive, which is why you pay attention to the Commitment of Traders report, which is basically the futures positioning on each individual currency. So at the moment, they are long the US dollar. They are long, no, ignore gold. They are long the euro. They are short all other currencies, basically meaning they're expecting those interest rates or those currency strengths to drop. But what happens with interest rates as well is they hit a terminal rate. So they are very much like any oscillator you'll find on your chart, like the RSI. Moves up and down between interest rate highs and interest rate lows. As you get to the highs, and they say things like we've just seen, we're not going to be putting our interest rates up for the next 12 months. We're going to hold where we are, and then we will look at reducing rates towards the end of next year. There's no reason to go any higher. So if you've got money to put somewhere and you want to put it somewhere safe, you're probably going to pick the best interest rate you can find out there at the moment. But there's only one way for interest rates to go down when they hit terminal rate. So the market is sitting there waiting for and trying to predict when they should start pulling out of a currency. But that's only when interest rates are really in charge of the market, which they have been for the last 18 months, because we've had nothing but interest rate rises every single month for 18 months. It's gone up by 0.25%, 0.25%, 0.5%, maybe a freeze, then 0.25%. They just keep going up and up and up. We're not going up anymore. We've hit what they call terminal rate. So now you need something else to take over. So we'll be looking at unemployment figures, inflation, which will be the key driver. As to guidance as to whether or not we should be going bullish or bearish. But what you'll probably find is currencies will just do this. How big the ranges will be dependent on news events, wars, all sorts of other stuff. But interest rates will take a little bit more of a back step now as to what we are driving, we are using to measure where a currency is going to go. So banks and institutions use a scorecarding system, which basically tells them, based on all of the economics for a currency, whether it should be rising or falling. Yeah. This is a simplified version of what you'll find in a bank. So if the Canadian dollar they think is going to fall and the US dollar they think is going to rise, that will have a much higher score, because the US dollar CAD, if the US dollar is going to rise and the CAD is going to drop, should be a much stronger buy than something like the US dollar against the euro, which is also forecast to rise. So a strong move up against a strong move up gives you a sideways movement. A strong move up against a strong move down gives you a very fast upward movement. So that's how it basically works. That's the basics. It's obviously a hell of a lot more complicated than that, but normally it's bullish. But when you've got banks and institutions like the pound, like the that pole there, we've moved into neutral ground, like that pole there, saying, right, that's it. We're not changing for 12 months. So, right, the banks now go, okay, we can ignore interest rates for the next 12 months unless inflation goes through the roof or drops dramatically faster than expected, or unemployment flies through the roof or drops faster than expected, or a war breaks out. The pound has got nothing to do with interest rates anymore. Same as the US, they've also said that. The euro have also said that. The euro said it this morning. They're all saying it now, basically. Because we don't want to put interest rates up. That causes unemployment, which is bad. So the ECB must be ready for either rate hikes or cuts in 2024. So we might do that. We might do that at some point in the next 12 months. Useless. Doesn't tell us anything, does it? So this is why on FOMC for the last 6 months or so, FOMC, we used to sit there in FOMC and go, right, where are we going now? And they used to give some guidance and you'd be waiting to see whether it's hawkish or not. And it was like, yeah, sounds like the currency is going to do well. At the moment, every single time they just come out and go, not sure. So this is why it's such a difficult market to trade at the moment, FX, because there is no advantage to any currency at the minute. So what you get is nothing. Which is good, because it means every time it pushes in one direction, you'd expect it to go the other way. Because if it's not going to go up and it's not going to go down, it's going to go sideways. So if it's gone up for a while, if it's going to remain going sideways, it's got to go down. So mean reversion works very well in this type of market. It's just a very confusing time at the moment. There's nothing you can do about it. You just have to adapt and see if you can figure out where the hell everything's going. Get out of those longs. This looks short. We've just broken the S&P lows. NASDAQ's propulsion gaps held, and the Dow's putting in an inside bar. Nothing but sellers coming in. So I think if we can get this low broken, and we can get the pre-market low broken, and the Dow can break yesterday's low, we'll flush. So this is a key level on all three of these currencies at the moment, all three of these indices at the moment. We're right at a point where if we can knock on this door again and get through these levels, we should get another leg down. And a nice little flush. But saying that, now I've said that, the S&P's quadruple bottomed. It is, and that level, look, it's just like pulling teeth at the moment, isn't it? Where's my graphic? Poor John. Little finger, look. Poor cricket. And he's missing, right, leg there. Leg there. Leg there. Where's that one? Reckon that's it? We can't work it out. A little bit like this market. I was thinking about increasing my risk per position slightly to 0.15 instead of 0.1 so that price doesn't have to go so far to get me out. What do you mean price doesn't have to go so far to get you out? That sounds to me like you're basing your exits on a financial value. You don't want to base your exits on a financial value. You want to base your exits on where you think price is going. Yeah. Where's Euro New Zealand going if it's going down? Probably into here, I suspect. Maybe that propulsion gap. But I'm not going to get out because I need X dollars. I'm getting out because I think that's where price will bounce. The higher the lot size, the higher the drawdown. Yes, the higher the reward, but what you're probably saying is I'll get out faster, which means you're going to leave more on the table. Price doesn't move to your financial targets. It moves to areas that it's going to test for support and resistance. So if this pushes up, that's where you get out if it breaks that level, because that's where it's going to head to retest, isn't it? So you don't get out there because you've got a monetary amount and you've used a higher lot size. You get out there because that's where price is going to go next. But yes, you will be able to get out faster, but then you will beat yourself up because you've got out too soon on everything. And you'll be thinking, I wish I hadn't got out so soon because it flushed twice as far and then it hit your target. You never will be able to win. You'll never be able to answer that question. I'm not basing them entirely on a financial value, but if there's a clear level, it might bounce. And it's not giving me what I want. I tend to look for areas. Yeah, I don't know. You get out when you get out. You get out at different levels depending on your portfolio and how things are going. So if you're having a really good month, you'll probably take profit quicker because you'll be worried about losing it. If you're having a bad month, you'll probably hold things longer to try and get more in your pot. What your lot size is directly related to your drawdown. So the trades that go well, you get out of. The trades that go bad, you get pain. So if the more lot size you use, the more pain you're going to receive, but your reward probably won't increase. If you look at your P&L, right, I'm sitting here at the moment looking at this going, that's $158. We've just broken the lows on everything but the Dow, which is trying very hard. Let's look at the EuroCAD. Look. So I'm selling this down to propulsion, which is 120 over 125 ADR. I could take that now and put that down there. I'm not going to because it's only $160. If I'd have got in with twice the lot size and gone 1.1 short instead of 0.55, that would be showing at $320 now. That I might well go, I'll have that. But I still think it's coming down there. So why have it now when I could have it there? If I'm wrong, it's going to go up and I'm going to need to add to it. If I'm wrong, I'd much rather be wrong with 0.55 than wrong with 1.1. Because my pain is twice as much. If this goes wrong and it squeezes against me for 4 weeks or 3 weeks or something stupid, I'm going to be more painful in my wrong analysis than I am in that. This NASDAQ's really putting a spanner in the works today. So we've just bought that level again. I want to see this close. Close below that pre-market level. NASDAQ's propping the market up at the minute for some reason. I don't know why, but we're not letting the market drop. And it's the NASDAQ which is out of sync at the minute. We've just made a new low, lower low and lower high. But look at this candle. Look at the wicks. John Wicks are all to the downside, meaning that the sellers are finding this incredibly hard work to make any progress because all the wicks are like that, which means you've got a lot of buyers on board. We are a gnat's whisker away from target on the S&P. Look. So I'm just going to get ready just in case to close that one out. White House, Israel will begin to implement 4-hour pauses in northern Gaza. That's good news, not bad. Honestly, though, I feel like on Forex, not indices, price can literally go anywhere. Yeah. That's the whole point of position trading, though, isn't it? Because you don't know where price is going. So you just take a position and wait for price to go the way that you want it to, because it will go the way you want it to, but you just don't know where it's going to go, when it's going to go. It can go anywhere, but you know where it's going to go, don't you? There's a whacking great blue line on the chart which tells you where it's going to go. Out the lows on the Dow, finally. So we should get that break on the S&P now. It's so hard. It's hard. Such hard work. Taking it. I'm taking that just because it's too close to TP to... yeah, now you can take my target. It's too close to leave it on the table. Just get ready to close it out on the other account as well. I'm just going to see if it's going to hit that first. Yeah, we're going to have a look at a chart in a sec, but just listening. I just want to hear what's coming next. I just want to hear the sellers come in because this isn't moving. The next batch of noise I want to hear is sellers because otherwise it's not going to hit my target. Either that or one of these two flush. There we go. Come on. Take it off. I can't be able to concentrate on it. Look at any FX chart. You say that price can literally go anywhere. Of course it can. We don't have any way of telling where price is going to go apart from where it always goes. Where does it always go? Yeah. Propulsion. Yeah. So where's this going? Down. Which of these is it going to hit? I don't know. But that's the beauty of position trading, right? So if you're short now on the Euro New Zealand from there, Euro Pound rather, and you didn't get out there, you've still got that target, this target here, and this whacking great leg down there, yeah, to aim for. So if in this case you didn't get out there and it pushed back up again and you went nowhere for weeks, you've still got that as a target. Yeah. So you just target the closest propulsion gap that is in the money. Yeah. Look at my Aussie New Zealand today. That was my target. Downside. Yeah. Look at all these targets. Yeah. Pushed up. Hit it. Filled it. This one. Filled it. Left all of these targets in place. Closed all those. Now it's coming down and closing that one. Where's it going? And if it doesn't go there, where's it going? So you know where it's going. You just don't know which. So either go long and scale in down to there and then get out, or go short and scale in up to there and then get out. You know where it's going because that's what it always does. It can literally go anywhere. It can go there or it can go there, but you know it's going there or there, don't you? Because it's going to fill one of those propulsion gaps. So all you're going to do is you're going to wait for it to do it. But it just takes a long time. And you think, as soon as you think like this thing here, right, left a propulsion gap, it retested it twice and it bounced out. And we were like, okay, it's going short. So we got into a long position here. Yeah. And as this dropped down to here, everybody in the world was thinking, there's no way it's getting back up there. Is there? It does. It always does. It fills these gaps. This is what this support resistance propulsion indicator is showing you. This is where we've turned from in the past, all these lines. So these are areas you want to watch for bounces back to propulsion moves. Where did we start the move? Where are the banks offside? Where's their unfinished business? The banks have got longs and shorts on all over the place at these levels. Down here, yeah, it's coming down here again. If it doesn't come down to there, it's coming to there. If it doesn't come to there, it's coming to there. If it doesn't get to there, it's going to there. If it doesn't get to there, it's going to there. I'm short on this thing at the moment, right now, and my target is there. Why? Because that is too close and not enough money. That is enough money. So that's where I'll get out. If this pushes up, that propulsion gap is now my target because I will get up, add another position, which means my average is now here, and I can target that propulsion gap. It will come to a propulsion gap at some point because it cannot go up forever. It has to have a profit take. Therefore, you just target the closest place. So you know where it's going. You just don't know if it's going to get there this week, next week, or next month. But you know it is. And if it isn't, you adjust your target. This is the beauty of position trading. This is the bit that people seem to miss. We're not saying you're missing it. I'm just saying this is what people don't get about it. All they see is that guy doesn't use a stop loss. What they don't see is I'm adjusting my entry level to make everything better. If I get in there and price goes up, I adjust my entry to there. If it goes up further, I adjust my entry to there. If it goes up further, I adjust my entry to there. I've always got a target to the downside, which is also moving with my position. So all I'm doing is waiting for the banks to do the move. I know where they're going, and I know they're going there because there's no one that can show me a chart in history that has never pulled back. Always does. Because the banks have got to make money. The only way they can make money is by getting out of the long positions they've just done by shorting them, or longing the short positions they've just entered. They enter in one direction, build a pot of cash, get out of that one. As they're getting out of that one, they build a pot of cash, get out of that one. Market structure. That's why we have it, because the banks have to make money. If they don't make money, we don't put our money in there. If we don't put our money in the banking system, the economy collapses. It's something that has to happen. We just need to know where they're going. And that's what these are. They're orders, which they will come back to. So you know where it's going. You can't say it can literally go anywhere. It can go anywhere, but you know where. It's going to go to one of those pink lines. And then it's going to come back down again. I don't know which one, but it is, because that's what it's done in the past, over and over and over again. Support and resistance just works. Because the banks sold that level for a reason. They then sold it again for a reason. They then sold it again for a reason. We got there again. We're selling. Funny, isn't it? Where are we going to? Where we came from? Because that's what they do. They just move it up and down all the time. It's completely manipulated by the banks. It's used as their little money-making tool. You just need to know how they make money. That's how they make money. So you know where it's going. You just got to wait. And that's the patience bit. Sitting in this thing and realizing that this is your account. Your account is there to be drawn into. That's its purpose. You have a bank account. It's your business. Yeah. Your business has a cash flow. That is your account. You draw into your cash flow to make money. Just need to make sure you don't draw too far into it. That's out of your control. But increasing your lot size draws into it twice as fast, or in your case, 50% as fast if you're going from a 0.1 to a 0.15. 50% more risk. Think of it in that way. It may sound like nothing. A 0.1 risk to a 0.15 risk, that's half again on top. That's 50% faster drawdown than you're experiencing at the moment. A lot. This NASDAQ can't get down. I'm calling it on the Dow over there. I've just got out of that Dow position because I didn't get stopped out on that one because I had a wider stop loss. So I've just got out there 4R. We've got some buying coming in. So we've got, again, yeah, this exactly what I just said. Yeah, where are we going now? Here. What's going to happen there? Don't know. Depends how many buyers and sellers are at that level. Yeah. When we were there last time, the sellers were in control. When we get there this time, the sellers are going to try and remain in control. They will either do so or they won't. But we have to retest this level and see if it can be done or not. That's what we do. That's just what we do. The logic is many theories out there. People think different things, but the logic is irrelevant, isn't it? It's a fact. That's what happens. Why it happens, who cares? Doesn't matter. It's encouraging because when you zoom out to the weekly or monthly on a Forex pair and look at the past 20 years, it's literally just range. Yeah. Your job is to survive. Yeah, you are in a vehicle. You're in it. Think of yourself in a double-decker bus on a motorway. The driver has just decided to jump ship. You're in a double-decker bus on a motorway. It's going to run out of petrol at some point. Your job is to survive the ride. When it runs out of petrol on the top of a hill, it's going to roll back down. Your job is just to survive on that hill until it rolls back down. That is it. Price goes up and down all the time. That's all it does. And your view of it, as you've just rightly said, is fractal. What is the Euro CAD doing right now? Ranging. What is the Euro CAD doing right now? Trending. What is the Euro CAD doing right now? Ranging. 3 different scenarios, same instrument, 3 different time frames. You're doing totally different things. What is Euro CAD doing right now? Dropping like a rock. You wouldn't want to buy that, would you? You want to buy it now? Damn right you do. It's pulling back on a long leg. What do you want to do now? Oh, I don't know. It's right in the middle of a range. I think I'll leave it until it gets up here or down there, and then I will buy it or sell it. Totally different view of exactly the same thing. 3 completely different trade setups, 3 completely different trade ideas, 3 completely different decision-making processes. You give this chart to 10 different people, you'll get completely different ideas. That's why the market works. Because if everybody agreed, it would just do one thing. Everybody disagrees on where it's going. You'll never be able to predict where it's going because you're not in charge of the bank that drives the thing up and down. Neither is the bank that drives it up and down because there's 10 of them doing it. I always do that. There's 10 of them doing it. So you just got to stay in the thing long enough. Right now, this is a beautiful resistance bounce or a pullback on an up leg. I don't know. It's one of those 2 things, isn't it? If you think it's a resistance bounce, you become a seller. If you think it's a pullback on an up leg, you wait 2 days and become a buyer. One of you is going to be wrong. The person that is going to lose money is the one that places an order in the market to stop them out with a loss. The one that makes money is the one that goes long, gets it wrong, long, gets it wrong, long, gets it right. That's the guy that makes the money. That's the bank. The person that gets it wrong is the retail trader that goes, this is a long. It's going to bounce off this 24 moving average. Stop out, lose 1% of my account. Okay, I'll have another go when it gets to the 72. Wrong. Stop out, lose 1% of my account. Damn, I'll go short. Profit take move. The long guy, me, is out. The guy that's lost 2% has just shorted it because everybody else is shorting it. Now it's going to move up and stop him out for 3%. You just got to know how it works. You don't need to know where it's going. You need to know how it's going to work. And then you can find out and figure out how to extract money out of it. Because you know what it's going to do, because it's done it for 100 years, exactly the same. And it will continue to do that as long as the banks need to make money. The pink lines on your chart is me. Yeah. They're mine. So these are basically the support resistance propulsion indicator draws support resistance propulsion lines on there for you. So the purple lines are the monthlies, the black lines are the weeklies. You can have as many of those as you like. But no, you can't have as many as you like. You can have up to 7. Can't remember how many I put in there. I can't remember how many I put. Maximum 6. So you can have 6 months or 6 weeks worth of previous levels. But there will always be levels depending on where you're viewing the chart, like here. So I've got 3 months worth on my chart. If I change it to 4, it will automatically draw that in for me. So if I move that pink line up and change it to 4 months, I've only got 2 showing actually. So if I change it to 3, yeah, now it's drawn that one in automatically for me, which is one I drew in myself. So I might as well leave it at 3. There you go. We've got 3 months worth on there now. So it draws it automatically. But I just wanted a color that it makes so you can differentiate, you know, manual levels, if you like. They're mine. Buyers are coming in. Bankers. Don't like the buyers today. Selling. Yeah, so I could use other analogies. The train one is always a good one I use. That's a new one, that bus one going up a hill. I haven't used that one before. But the easiest way to explain it, and the way it was explained to me originally, was the train analogy. So you get in on a train here, and you have no way of knowing whether or not the engine is on that end of the train or that end of the train. You just get on the train. Train's going that way or that way. Yeah. The driver's going to get in one of them. So every time you get on the train, there's a chance of it going in your direction. If that's the station you want to get to and the train goes that way, you're going to have to get off. Or you could wait for the train to turn around in the other way. But this train has tracks and a driver, and you have no control over that train. Once you're on it, you're on it. You get off when you get a station that is close enough to your destination, i.e. a profit, for you to actually get out of that train. Yeah, this is your train. When that's green, you can get out. If that's red, you wait for it to get to your station. That's how it was explained to me, basically. And it's the easiest analogy I can use to demonstrate that you have no control and no way of formulating any strategy that could give you any control over where price is going to move in the future. So if you can't control where price is going to go in the future, why would you look for a system or a strategy that can do that? It doesn't exist. Yeah. It's like saying, okay, I can bend the tracks on the train. No, you can't. Just can't. So stop trying. Yeah. As soon as you let go of control, you suddenly realize that it's just a case of time. Price moves up and down through time. You can't control the up and down, but you can wait. That's the only thing you have control over. How long you're going to wait in that trade for. And at some point, you're going to wait in that trade for such a long time, you're going to go, I've got to pull the plug on it, as I did with oil. Yeah. I waited on the train and it just didn't get back to my station. And I went, screw you, I'm out. So I got out of that one after 2 weeks of waiting for this thing to go where I want it to. I can almost guarantee you now, this will be back up here within 3 to 4 days, because every time I get out, it's always at the last station, because I can't stand it anymore, because my lot sizing is enough that I get to a point where I'm like in so much pain, I go, nah, no more. And you release the pressure. As soon as you release the pressure, they do it. Always. You'll find that at some point. You'll go, screw this, I'm getting out. This is rubbish. Boing. And then it goes straight back to that propulsion gap, which is my average. And it gives me an exit because it's a 50% retracement on that leg. That leg just was 2 to 3 times bigger than I thought it was going to be. That leg will retrace by 50% because it always does. Always has. Always will. Because when they short that, they need to take some profit. And not all of that is speculative. Half of that is going to be positioning, short, long term. So they'll get out of at least half of it. If the fundamentals change and they want to drive it up, they'll get out of all of it and you'll get a V-shaped recovery on the move. You don't know because you're not a bank. You'll never know. You can only look at what they do in the past. They either retrace it or they recover it. Those are the two things that happen. If they retrace it, they put a new leg in down. If they recover it, that becomes your new market structure low, and then they might move it that way. But then again, they might come back down and test that level again. You have no idea. You haven't got control of the train. Like I say, you just got to get on and wait. That's your only option. But you can keep looking for it. You know, look for the holy grail strategy that knows which way price is going. But I can tell you, it's a long old hunt. What's my minimum TP when you're not taking positions off due to news and so on? I don't have a minimum TP. It's where, so I do have a minimum TP. There's no point in me getting into a position and not making 0.25% on it at least. So oil, for example, here, this entry that I've got, that propulsion gap is 1.5%. This is an aggressive drawdown control position, so that's probably not a good example. But that, if let's say, for example, that was 0.35%, that's fine. I'm happy to take 1/3%. Because if I take 1/3% on 10 trades, that's 3.5%. If I want to make 10 to 15% a month, 30 trades a month, 40 trades a month, I'm done. So I wouldn't get out of anything that is less than 1/4%. Unless I'm sitting there looking at it going $220 for 3 days solid, I'll be going, it's just not going anywhere. I'll just take it off. Basically, the trade hasn't worked. So just get out. No, there's no right or wrong, but that's where I would expect us to get back to. In this case, it's not a propulsion gap. It is kind of a propulsion gap. It's this one here. You can't quite see it. Buyers are coming in on the indices. So this propulsion gap here, ADR 175, that is the accumulation break of that support. So we went down, we tried to get through, and finally we did. If that is going to become a support turn resistance, that's what we're going to test. We're not going to get through that level. So if we're not going to get through that level, what do I want to do when we get there? Yeah. If it pushes down, this isn't a position trade. This is a bit of a silly example, but if it pushes down and I have to add another position, my average price will come down. I won't target that one anymore. I'll target that one or maybe that one. It depends where my average is. And this is why you have an average. Let's find a trade that I'm in that actually makes sense rather than oil. CAD Swiss. So CAD Swiss, there's my average, that green line. Yeah. So that's my target. Bit optimistic. No way on God's earth I'm going to hold it all the way up to there because it's like 500 ADR. I'm not going to hold it up to there. What I'm going to do is I'm going to get out there because that previous support that broke has turned into resistance. So I know that that level there is potentially forming either a range or it's something that is going to form a new leg down. I don't know what it's going to be. I have no idea. They've tested it once. They didn't want it to go through. So if we do get back to that level, probably not going to get through again. Don't know. It's a 50-50 shot when we get there. It's either going to do that or that. I've no idea. But I know that that propulsion gap there is likely to get filled. So that's where the TPs will be moved to because that is my average and that is a profit. I'm after making profit. That's a profit. I'm taking it. If you want to hold it and hope that it breaks that level, I think probably at some point in the next month, you'll be there. But do you want to wait a month? And what could happen is it could do this. Bounce, break, accumulate, pop up, hit that low, bounce down, accumulate. You could be sitting there 2 weeks before Christmas going, oh, it's nearly there. And then it could go, vroom, vroom, vroom. Why? Just get out there. Get in short later. When you get an RSI extension to the upside, get in short. Do that. Do that or that. Doesn't make sense, does it? Just get out where you can get out. Don't set a monetary amount on it. I think this is going here. So my TPs, this one here, let's move them now. Look. There. That's 1.8%. 0.8%, so that's 2.6%. 2.8% minus 0.25%. Call it 2.5. And then that one there, call it 2%. Then that one there, call it another 0.5%. So that's 1.5% profit. Yeah, I got into this trade there. It came down, I got into it again. It came down, I got into it again, got into it again. I've already taken probably 1% out of this already. And then it came down again, so I did another one and another one. Yeah. So now if I get up to there, I'm going to get out with 1.5% plus whatever the profit on those two was after staying in this thing since the 10th of October. We're nearly on the 10th of November. So this has taken a month to extract 2% from the market. But what have I lost? I haven't been stopped out once. Just waiting for the market to correct back to that level, or that level now. And if it pushes down again, it will create another propulsion gap. And that will become my target when my average drops below it. And I'll get out at that one. Because I don't know when it's going anywhere. Because how can you? Everyone can go, oh, well, when it gets down to there, it's going to double bottom bounce. There's a 50-50 shot. Do you want to take a 1% loss on the hope that your 50-50 shot works? Or would you rather just wait for it to work at some point in the future? Maybe a week, a month, or 6 weeks. Would you want to be right and profitable? Or get the double bottom bounce and post it on Telegram going, hey, look at that perfect trade I got. Who cares? Barkin, I'm not convinced inflation is a smooth glide path to 2%. Bearish US. This is what we were talking about earlier. With these terminal rates of 5.5% on the US dollar. Yeah, that's where we are at the moment. And they're saying, we're not going to change this for a year. Unless, and there's always an unless. There's always a but. I don't think we're necessarily going to just get down to 2% by staying where we are, is what he's saying. Which is potentially, we might have to do it up again, you know, a little bit more. Sorry about your mortgages. But don't worry, if you've got any savings, we'll give you another 0.1% on it when we increase it by, you know, not good, negative currency. Could be positive, though. Depends how the market interprets it. You don't know how the market's ever going to interpret it. Market's rallying again. So we're now back up inside the opening range on the NASDAQ. Oh, I need to put my stop loss on that because I forgot I've taken that manual, haven't I? So S&P 4 o'clock. So I can close off these buy stops now. So break even on that one. So let's hope this propulsion gap holds. So we're looking at a high, low, lower high, lower low, lower high. Back down to there and retest that low. This is where I would like to see them drop. If that doesn't work out and the sellers that were there before are out of these positions and they're not short anymore, the buyers will be able to make headway back up to where they started to sell it earlier today, in which case then we'll see if there's more sellers wanting to drive it back down from there. This is why the price is attracted to these levels. It's a battle between buyers and sellers. These are the trenches. At the moment, They're not interested in selling anymore. They've had enough, unfortunately. Means I'm going to have to re-hedge this over here, which is going to really annoy me. What can I do? Another losing day today. It's not going to be good. Not big, but these markets are so difficult at the minute. Anyway, hopefully that answers the question. Percent profit. I don't have a 0.25%. Love to get 0.5% every trade, but it's what is achievable is what you go for. That is achievable. That is probably 0.25%. But why take profit at 0.25% when it's more likely we're going to achieve that or a double top? That's 1.5%. That's probably 2.25%, 2.5%. But you know, the other thing I do quite often is when we get to a level. So let's say, for example, we're on Tuesday, Wednesday next week, and we're sitting here, and we get a nice big bull candle going. What I might do is actually go, I'm not going to use TPs anymore. I'll either move them up or I'll delete them, and I'll put a trailing stop on it above there, hoping that we can get to there and I can trail to that level. If it then accumulates and smashes through that, I can trail further and make more money. Again, it's all done on a trade by trade basis. There's no right or wrong. It's, I don't know, what do you fancy? Do you think it looks good? If it looks good, change it. It's a dynamic thing, trading. You don't have to go, it's got to get out there. Yeah. If, another example, we get to there and there's a news event coming. I've just got out of the S&P. I'm already out of the S&P on this other account, I think. So let's say we get to there and it's an hour before the news. Remove that, break even, and hope the news drives your way. You could find yourself up there, couldn't you? With a fortune on your hands. Or you could find yourself stopped out and have sat in this for a month and got nothing out of it. Again, what have you lost? Nothing. It's all about not losing money, trading. It's not about making money. It's about not losing money. If you don't lose money, you're going to make money. You can't not make money. Like every strategy out there, everyone tries to make it more profitable. Stop trying to make it more profitable. Focus on what's losing and try and remove the losses. Because if you remove the losses, you automatically become more profitable. Just remove the losses. That's the way I look at it anyway. But, you know, many ways to look at it. More than one way to crack a walnut, as they say. Right, stopped out on the S&P, break even second half. Just not my week this week, is it? I'm flat this week. Just can't get any traction on anything at the moment. Market's just, look at this thing. It's just a mess. So I'm going to re-hedge the NASDAQ. That's just pushing out the highs. Just waiting to see how far it goes. We're back up at yesterday's high, so I'm just waiting to see if they're going to double top this. Obviously, I'm hemorrhaging cash, so I'm just conscious. I want to put an alert there. So just going with a hedge above that high. Can we make any progress on that today? So either this now, that high holds, and it's just a very deep pullback, or we break out and we go long, as we did on the DAX yesterday, and we did on the US indices yesterday pretty much. In which case then I'll just hedge that loss in. In the arse today, isn't it? Difficult. putting a hedge in place on the other account as well. Right, that's all I've got for you today. So not a good day today again. Was an opportunity to get out of stuff today. This could have been same as yesterday as well. That could have been a break even yesterday if I'd have actually got out at the low, which I didn't. This trade here could have been a $300 loss. That's what I got. I think it's $500 actually. It was a $500 loss I got to. I banked 3.5K. So it would have been a profitable day if I had done that properly. Didn't. I say properly, if I had have got out at the right spot on the DAX today, but I was expecting a tank and I'm not getting it. It's not dropping, is it? So these indices are really struggling to get back down to these lows. We've had a big push, completely sideways. It breaks to the upside. Maybe that indicator that says we're going to get a 20% increase on the S&P over the next 12 months is right. And we ain't going to drop. We're just going to go into a bull market and run exactly as we used to before COVID. Who knows? We'll find out in the next few months if we start breaking all-time highs, won't we? So let's see where we go from there. Right, I'll leave it there today. Anything you need, let me know. I'll be in Telegram. Back tomorrow, 7:50, same time for Frankfurt, 2:20 for the US session. Nothing exciting to bank at the moment here. Aussie dollar Swiss is kind of hopefully going to put another leg into the downside. So I might be banking that one today or tomorrow. Hopefully we might get a drop on the Aussie dollar tomorrow morning back down into this area. So hopefully I can bank that one as well. 0.5% bank today. Oil killed me yesterday and still got big drawdown on oil. So I really need oil to push. My month is hinging on oil at the moment, which is annoying because I don't trade it. Do now, but I'm going to stop trading it. So yeah, hopefully I can get that back to, if we get back to sort of -2% or something like that, I will probably just dump it and go, not playing with you anymore, and obviously get back to FX stuff. So, but everything else is just kind of sitting around at the moment. CAD Swiss is the main issue. Still waiting for some movement. Again, so much stuff sitting around at the moment for a long time, causing drawdown that just stays there for ages. So we'll get out of it at some point. Right. So I will leave it there. Anything you need, let me know. NASDAQ, just to finish, if this hedges, which it looks like it might do, there's not a lot I can do with it because there's no upside targets. So if it rallies out these highs, I will probably not get out of this until ADR. I don't think we're going to get a rally that far, but I don't know what else to do with this today. It's just completely directionless, isn't it? So it's just untradeable at the moment. So I'm really just hoping that we go into rotation today and I can get out back down here somewhere. But if it hedges, it hedges. It's locked in. It's going on the P&L. Nothing I can do. Right, I'll leave it there. Anything you need, let me know. Other than that, hopefully see you tomorrow. Anything else, Telegram. Have a good evening.